Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Taking a breather, Asian stocks set to break their longest winning streak since January as uncertainty over Fed interest rate cuts curbs risk appetite. Do the right thing. President Trump says he will not fire Jerome Powell while increasing pressure on the Fed chair to lower interest rates during a rare visit to the central bank headquarters. And the U.S. and Israel pulled their negotiating teams from ceasefire talks in Gaza as the Trump administration accuses Hamas of not acting in good faith. It's just gone 8 a.m. across the Emirates. I'm Jumana Versace in Dubai. Well, another strong week for global markets. Looking back at the week, it has been quite a stellar week. Another all-time record high for the S&P and the Nasdaq yesterday, boosted by gains in Alphabet, as we were talking about yesterday on the show. But then also better data to contend with as well. We had PMI manufacturing numbers in the U.S. come in better than expectations. You also had jobless claims fall to the lowest level since April. So some strength in the labor market also constituting a backdrop for global equities. Today, you can see S&P futures once again leaning towards another positive session, up 0.3%. Earnings season continues. European markets not doing a whole lot today, but the theme has been one again of positive reaction this week to both the macro data, the ECB meeting yesterday, Lagarde saying they're in wait-and-see mode, but clearly the focus over the next few days is going to be on whether there can be any progress with those trade discussions with the U.S. 10-year yields at 4.39. We moved a couple of basis points higher yesterday after that jobless claims data came through, showing some strength in the labor market. And then the euro, not a whole lot of movement, I should say, into and out of the ECB meeting. Though today we have dropped a little bit, about 5 basis points. Markets have pared back their expectations of how many rate cuts are going to transpire this year. Let's flip the board and let me show you. Before going into the meeting, there are about 23 basis points worth of additional cuts priced in. Now we're sitting at 16, so we've trimmed quite a lot. And this is in line with the language and the tone that came out of the press conference yesterday with Christine Lagarde saying we're in a good place on inflation, with headline inflation sitting at exactly their target at 2%. Okay, let's check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. It's been a really strong week for Asian indices, particularly in Japan as well. But Avril, this morning, perhaps breathing a bit of a sigh of relief, people taking some chips off the table before the weekend?
Yeah, I think markets in the region were sort of due for a bit of a breather after a strong week, as you say. So after 6 sessions of gains, we're seeing the declines in the region's benchmark. We're seeing Chinese stocks trading lower today. There are these lingering concerns about price wars among the internet names. And then in Japan, after 2 really solid sessions following a trade deal with the US, you're seeing some profit taking also underway. In the meantime, it's that lookout for next week. Not just the Fed, also the BOJ. And we had data today. Tokyo CPI was a miss, so we're seeing a bit of relief among JGBs. But this, as you know, is a leading indicator of nationwide trends. And we have the likes of Bloomberg Intelligence saying that while the BOJ is likely to stay cautious next week, that the most recent data is unlikely to discourage it from eventually gradually hiking rates. Jumana.
Avril, thank you so much. Avril Hong in Singapore. President Trump has downplayed his clash with the Fed Chair Jerome Powell over cost overruns during a tour of the central bank's renovation project. But he repeated that he wants interest rates lowered, saying he believes the central bank will make that decision soon.
To do that is a big move, and I just don't think it's necessary. And I believe that he's going to do the right thing.
Do you have a name in mind?
I believe that the chairman is going to do the right thing. I mean, it may be a little too late, as the expression goes, but I believe he's going to do the right thing. Well, I'd love him to lower interest rates, but other than that, what can I tell you? The country is doing really well. I just briefed the chairman on the deal we made with Japan. Japan is putting up $550 billion in order to lower their tariffs a little bit.
A bit of an awkward moment there. Joining us is Norman Villamin, Group Chief Strategist at UBP. Really good to have you with us, Norman. Maybe let me just start with Powell-Trump, their relationship. Trump now seems to suggest that he is not going to be firing Powell, that his job is safe at least until the end of his term. Do you think there was any risk premium being factored into markets here over the real possibility of him being forcibly removed?
Well, there probably was a risk premium being built in, but as you point out, this is really only a temporary reprieve because his term is up next May. And so markets are going to have to deal with a post-Powell Fed, if you like, as soon as May. And that potentially is inflationary in our view.
Okay, interesting. So let's talk about that in a moment. Let me just ask you about the here and the now, because you look at the data that's been coming through. The labor market has seemed to be resilient, more resilient than people expected so far. CPI has actually disappointed or come in lower than market expectations, or softer than market expectations. So things are proceeding at pace. You even had PMI surprises to the upside yesterday. So the backdrop right now speaks to the health of the U.S. economy. The Fed Chair Jerome Powell doesn't really have the justification to cut interest rates.
We don't think there's a lot of room to cut interest rates here. We may do one by the end of the year from here. But as you point out, inflation has come down. We think it's stabilizing, probably bottoms and picks up in the back half of the year. And the growth picture is slowing, but stable. And the job market looks actually quite firm here. So yes, we would agree with you. The U.S. economy looks like it's in fairly good shape.
Okay, so you think that his replacement will be somebody more dovish, more inclined to cut interest rates. The reaction will be inflationary in the market. Where is the release valve for that? Is it in yields, as the expectation has been thus far?
We do think it will end up being in yield as we move into next year. We've obviously talked about kind of the potential for change in the Fed from here, and they may accommodate a bit more inflation in the system. But I think the other thing to just keep in mind, Trump has just passed his big, beautiful bill, and that's going to bring fiscal stimulus into the system entering 2026. And that, again, we think will end up being a bit reflationary from here. And then we add that to the old tariff picture, where we're getting some clarity. And again, let's call it 10-15% seems on where everybody's settling. I mean, all 3 point to higher, not lower prices from here.
Okay, what does that do to equities? Markets are trading at all-time highs. Which was surprising, given if you had told everyone at the beginning of the year that the global tariff rate was going to be set at 15%, people probably would have been very worried. But now you're looking at S&P and NASDAQ at record highs once again. Does that momentum continue, or are we going to run out of steam?
We think that momentum continues for now. And I think what has happened is you've seen this pivot from the tariff focus, which was very much a second quarter focus, to what we're starting to see is a greater focus on what we believe is the fiscal stimulus unfolding around the world. So obviously the big, beautiful bill in the US, the German parliament will sit in September, and they'll debate their $1.5 trillion fiscal stimulus as well. And then you have the Chinese 5-year plan should begin to be unpacked as we move into year end. So those three large economies are all preparing for fairly meaningful stimulus as we move into 2026.
If you look at the leadership, though, in the S&P, and we were tracking this earlier this week, the breadth of the move is quite narrow, i.e. you still have the same handful of tech stocks that have been leading the way. Do you also expect that leadership to stay concentrated, or as you speak of, fiscal stimulus and the impact that it could have on the broader economy, you could see more sectors participate in the broader rally?
Well, I think when we look at fiscal stimulus, if you like, what's leading in different parts of the world. So in the U.S. technology, we continue to see banks and defense stocks in Europe do well. This is essentially where the fiscal stimulus will end up being deployed. And investors are effectively just following the money of this fiscal stimulus, we believe, going forward. And we think that's the right approach. We think we will see some broadening. We are seeing some of the industrial names start to broaden as they should benefit from some of the tax policy changes going forward from here. But again, one of the key focuses in terms of new spending ends up being in AI and in tech spending, and that should continue to underpin that bid.
Norman, thank you so much. Norman Villamin, a Group Chief Strategist at UBP. Now for a look at some of the other stories we're following. LVMH sales fell in the second quarter as demand slumped in Japan and China. Revenue at its key fashion and leather goods division tumbled 9%, which was worse than analysts expected. First half profits slipped 15%, and shares are down nearly 30% over the past year. Still, portfolio managers say LVMH is better positioned than rivals to weather the slowdown. Intel tumbled in late trading after the CEO, Lip-Bu Tang, sparked concerns that he was more focused on cost-cutting than restoring the chipmaker's technological edge. Tan says the company will cancel some factory projects and take a more conservative approach to future spending. That overshadowed an upbeat third-quarter sales forecast. And coming up, we look at how nearly 2 years of bombardment of Gaza has left a toxic legacy that will last generations. A closer look with Bloomberg analysts next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Israel and the U.S. are withdrawing teams from ceasefire negotiations with Hamas, citing the group's unwillingness to agree to terms. President Trump's envoy, Steve Witkoff, says Hamas showed a lack of desire to end the war. Israel's Benjamin Netanyahu has said any deal must include Hamas surrendering and giving up control of Gaza. Talks had aimed to secure a 60-day truce and the release of remaining hostages. French President Emmanuel Macron says France will officially recognize a Palestinian state, becoming the first G7 nation to do so. Macron says France remains committed to what he describes as a just and durable peace, while calling for an urgent ceasefire. The U.S. Secretary of State Marco Rubio criticized the move, stating in a post that it sets back peace. And aid groups are voicing concern over the humanitarian situation in Gaza, saying conditions are worse than ever and that starvation is spreading. Doctors Without Borders says there is no real change on the ground, accusing Israel of failing to make good on its arrangement to increase the flow of food. The WHO says it's now witnessing a deadly surge in malnutrition-related deaths. The Hamas-run health ministry says 33 Palestinians have died of malnutrition over the last 48 hours. And after nearly 2 years of chaos, the environmental cost of the war in Gaza is also overwhelming. Bloomberg analysis of informal waste sites shows Israel's bombardment leaving contaminated soil, blackened water, and mounds of garbage, spreading disease and pollution. A toxic legacy that will last generations and extend beyond its borders. Joining us now is one of the authors of this extensive report, Bloomberg's Fadwa Hodali. Fadwa, as we speak to the humanitarian crisis in the Gaza Strip, talk to us about the scope of the environmental damage also that has been leveled.
I think the scope of damage is catastrophic. The best description that I could find for this is the collapse of the ecosystem. Everything has been affected. The water, the soil, the land. If we look at each sector and the devastation of it, it is humongous. If we talk about the contamination of coastal water, the marine, the soil contamination from the bombardment, from decomposed bodies, the toxic in there, agriculture, the fruit basket of there is a sector called Wadi Gaza that it's the fruit basket of Gaza. Used to be the fruit basket of Gaza. It's been destroyed. Sewage running through the streets. So you can imagine the devastation that is leaving for years and years, if not decades, on the environment.
And we started this off talking about the growing humanitarian crisis with people literally dying of starvation. How does the environmental disaster compound this humanitarian crisis?
Well, and if you look at each sector, for example, like the water sector, 97% of the water is not safe to drink in Gaza. Aquifers have been contaminated. Fuel, there's a shortage of fuel. This is affecting the desalination plants for the pumping of the sewage water, also for the water itself. So imagine if you're not getting safe water for people to drink. The health sector, sewage is running through the streets, the tents where the displaced people are living. This is creating a disastrous situation, infectious disease, health situation. People are complaining of diseases that they have not been witnessed before, the insects. So you can imagine that sector in there by itself, how it's impacting the daily life of Palestinian agriculture, soil contaminated, the debris, the bombings, the decomposed bodies, everything is on the ground. You can't do anything, no trees. For people to actually enjoy being in there, because everything has been destroyed, actually. So imagine the amount of destruction on every single little sector in there. The marine life. We know that Gazans depended a lot on the marine life. The sea is polluted with the sewage water running into this. So this is, of course, creating, there are no other sources for them to sustain this humanitarian crisis, on top of the lack of food that they've been not been getting, and the closure of the crossings. So you can imagine the impact that is creating on the humanitarian level.
Bloomberg's Fadwa Khadali from Bethlehem. Thank you so much for giving us that report, and a full analysis on the environmental impacts the war in Gaza has leveled. You can go to the terminal. There's some also quite stark images in there as well. Now, coming up, $2 billion in the red. The IMF says Malawi is at a critical juncture. More on the state of its finances and economy next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. The UN Security Council will reportedly meet on Friday to discuss the rapid escalation in a border conflict between Thailand and Cambodia. At least 14 people were killed on Thursday as fighting broke out. Thai fighter jets struck Cambodian military targets, and both sides traded fire across the border. It follows a buildup of tensions since a Cambodian soldier was killed in May, and a chain of political events in Bangkok that have threatened the ruling coalition. And the IMF says Malawi will be facing a $2 billion hole in its net foreign reserves by the end of this year, equivalent to almost a fifth of the country's total economy. The Washington-based lender is warning that the nation is now at a critical juncture. Bloomberg's Ondiro Ganga joins us now. Ondiro, how did Malawi get to this point?
Hi, Jumana. So for context, Malawi is a really small landlocked country in the southeastern part of South Africa. And this is a country that is having a lot of challenges when they are heavily reliant on agricultural exports, for example, tobacco. And domestically, this is an economy that relies on agriculture. And they have been experiencing a couple of challenges, one of them being bad weather, which has affected food production locally. And a government that has a large appetite for spending. They're spending more than they're able to collect. And this has put them in sort of a fix. They are now forced to rely on borrowing and grant to finance a budget deficit so big at 10% that it's one of the biggest on the African continent. And this coupled with other challenges like high inflation. Then you have an economy that is growing very slow. They're yet to hit their pre-COVID levels. And a population that is growing so fast. Technically, Malawi is growing poorer and poorer by the day. They've tried to stop this bleeding. They went to the IMF, tried to get a program, but they weren't able to even get one successful review. This means that they can't unlock funding from anyone else. The World Bank and also multilateral lenders on the African continent. They also begun the process of restructuring their debt. They've spoken to a couple of bilateral lenders, India, China. They've made significant headway there. But an uphill task awaits them when it comes to the African multilateral lenders, especially the Afrexim Bank and TDB, where they owe about $1 billion. These are banks that are currently in a tiff with Zambia and Ghana over restructuring. So an uphill task awaits Malawi. Then we can draw parallels between this country and Argentina. Argentina was in the same fix. However, they've been able to successfully renegotiate a program with the IMF. They've implemented painful reforms, and so far their net reserves are back to zero. On the other hand, Malawi's economy is struggling by the day. They will not be able to implement some of these reforms because of how painful they're going to be, particularly when it comes to removal of subsidies. So moving forward, this is a country that needs an IMF to try and boost its reserves and just stop the bleeding that they're currently experiencing.
Yeah, and Ondiro, speaking of the IMF, the fund is also starting talks with Senegal next month on a new program. What is the significance of that development?
Jumana, this is big for Senegal because IMF had put on pause the previous program that they had $1.8 billion after it was revealed that the previous administration was not forthcoming and honest with the state of the economy. This is a country that had $7 billion of public debt that was not disclosed to the public, and this drove their debt to GDP to about 119%. And this pushed the IMF to just press pause so that Senegal can relook its numbers, particularly because the new president had called for an audit to try and establish the real state of the economy. And with this news, we've seen their bonds reacting positively. 2033, 2031 bonds all up by about 4% on the dollar. And this just means that it could re-inspire confidence back in Senegal from the markets.
Bloomberg's Ondiro Ganga in Kigali, Rwanda. Thank you so much. Well, sticking to the continent, Ghana has lowered its 2025 budget deficit target after raising its revenue forecast and trimming projected spending. The country's finance minister cut the fiscal gap estimate to 2.8% of GDP from 3.1% in a mid-year budget review presented to Parliament on Thursday. The primary balance target was retained at a surplus of 1.5% of GDP. And a look at equity futures as we head into the final trading day of the week. A bit of consolidation going on in Asian equities, but not so much the case if you look at these futures. S&P futures building on the gains of the week, pointing to yet another strong open, another potential record high in the works today. Nasdaq also up 0.2%. Yesterday, Alphabet was one of the names people are watching on after their better than expected results and that huge capex spending number. Obviously, earnings season continues in Europe today. European markets trading sideways after ECB, but later today we'll get some big earnings, including the likes of VW in the auto space. So watch out for that. But this is the picture ending the week on a high for most of these futures. And coming up, we're going to be discussing the oil market as prices climb as well. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Asian stocks set to break their longest winning streak since January as uncertainty over Fed interest rate cuts curbs risk appetite. Do the right thing. President Trump says he will not fire Jerome Powell while increasing pressure on the Fed chair to lower interest rates during a rare visit to the central bank headquarters. And Saudi Arabia signs major investment and partnership deals worth more than $6 billion in Syria to help rebuild the war-ravaged country. Well, it's just gone 8:30 a.m. across the Emirates. I'm Jumana Barsachi in Dubai. Happy Friday, everybody. Taking a look at these markets, S&P futures in the green today, up 0.2%, another all-time record high. Strong data coming through. We've been talking a lot about earnings, but also PMI manufacturing numbers surprising to the upside yesterday. Those labor market figures, the jobless claims coming at the lowest level since April, also speaks to the health of the U.S. economy and the better earnings season that we've had so far. So all of that has been positive positive for U.S. equities, European markets as well, trading sideways today. But again, another firmer week for European indices, especially as there is now some optimism that the U.S. and EU may be able to agree to a trading deal before that August the 1st deadline. 10-year yields, we moved about 3-4 basis points higher in trading yesterday. We're sitting at 3.9%, 4.39%. And then the euro, 117.40. We had the ECB meeting. No rate cuts yesterday. And in fact, Christine Lagarde, the ECB president, says that they are basically in wait-and-see mode from this point onwards, and that they're pretty happy with how things are because inflation essentially is at target. Let's flip over and just tells you that in terms of rate cut expectations, the market has priced out some of the rate cuts embedded into the market by the end of this year. We had about 26 basis points going in. We've now got 16 basis points priced in, as it probably will become increasingly more difficult for the doves on the committee to persuade the others to go for interest rate cuts perhaps as soon as September. So that's the ECB takeaway. Now let's move on and talk about the energy complex. Oil rising this morning on trade optimism and tightness in the diesel market. Indian Commerce Minister Piyush Goyal says he's confident that his country can reach an agreement with the U.S. before the August 1st deadline, while Brazil and Mexico are looking to broaden trade ties. Joining us now is Rachel Ziemba, founder of Ziemba Insights. Rachel, always good to talk to you. How much of the direction of travel for oil markets from here is going to be determined by the success of these trade deals and whether other trade deals can be negotiated before that August 1st deadline?
So I think the trade deals are going to be important. The other thing the market is absorbing is particularly the product markets is our new EU sanctions on Russia-linked sort of refined products. So that's going to take a bit of time to shake out, but it's more relevant for diesel. But ultimately, I think overall market sentiment driven by tariffs and that dynamic will be the primary factor.
You mentioned the potential sanctions or possibly secondary sanctions on Russia. I mean, there was an opportunity where President Trump could have announced that last week or the week before, and he didn't. What is the expectation now in the market that the U.S. may go down a more hawkish route as far as Russian oil exports are concerned?
I don't think the markets are pricing in a meaningful hawkish tilt. I think they're expecting, if anything, modest reductions of oil supply from some of the sanctioned economies. Iran, Venezuela may actually be coming back into play with a little more production in the coming weeks. But where Russia's concerned, I think the market view is that Trump will blink. At the moment, given secondary tariffs are the only policy the U.S. has on the table. They are uninterested in joining the Europeans, the Brits, and the EU in tightening up measures on the shadow fleet or joining the new lower price cap. And so I think President Trump's goal is going to be to keep the Russian flows flowing and is less concerned about economic pressure.
We saw a lot of geopolitical premium get priced into oil around the Iran-Israel war. That has been largely taken out now. If you look at where oil is trading back at, $68, $69. But then at the same time, there's been very little positive progress to speak of, either when it comes to those Gaza ceasefire talks, U.S.-Iran, not really back at the negotiating table again. Do you think perhaps once again the market is underestimating the possibility of yet another flaring up of geopolitical tensions in this part of the world?
Yeah, so I think the markets are very much in show me the outage mode still. And it's one of the reasons why you're right. We definitely saw a geopolitical risk premium come into the market, but a fairly modest one. The dynamics we've also seen are OPEC capacity increases, even if actual production has not followed suit. That's a big key factor. And more generally, we are, of course, course, heading into an August and September where snapback of UN sanctions is possible, and where there'll be a push for diplomacy. But I think there will also be a lot of breakdowns of that diplomacy. Ultimately, the US sanctions pressure is likely to be incremental, and China is not showing any signs of cutting back on their Iranian supplies. So I think the market's probably pricing this right, but I think is not thinking through maybe the medium term impacts of production declines in the United States, for example, and other things that might tighten the market next year.
Yeah, speaking about the potential, production declines in the United States, and you actually heard it from some of the drillers this week, talking about the outlook. How much scope do you see for energy to be a core part of some of these trade deals that the United States is going to be inking? It was interesting the other day, lost amongst all of the other things that came out of the US-Japan trade deal, but that there was actually a JV, a promise to establish a JV between the US and Japan on the Alaska LNG exports. Are you expecting there to be perhaps a tailwind to the US energy sector on back of these potential deals that the US may be signing with other blocs around the world?
Yeah, you're right, Jumana. There were direct purchase agreements going beyond this Alaska LNG JV, which it would be many years in the future and quite an expensive projects. And we could see other energy importers signing on, like South Korea, right, which was still trying to do a deal. But near term, the Japanese have promised to buy biofuels. They've promised to buy LNG. And in fact, JERA has already been contracting more US LNG. That's partly a trade factor or trade pressure factor, but also partly that natural gas markets have tightened a bit with Europe needing to resupply. So I think there will be a bit of a bid. I think it's likely more supportive of natural gas than it is of oil. Oil producers are facing more challenges on the cost curve and are less able to pass on the costs of higher steel and aluminum and other such inputs. So, we'll see. Current prices make it give a little more breathing room for the producers, but it's still not a great environment for US producers versus their peers.
Rachel, so good to chat to you. Also, loving the backdrop from Vancouver. Rachel Ziemba, founder of Ziemba
Turkish
Insights.
tile collection.
Good to have you on.
Thank you.
Turkish tile collection, she says. Well, deadly sectarian clashes in southwestern Syria have exposed the new leader's failure to forge national unity, with government forces siding with Bedouin tribes against the Druze minority. Joining me now is Bloomberg's Sam Daghir, who's done a deep dive into everything that has happened in Syria since the fall of the Assad regime. It's difficult to believe that was 8 months ago, Sam. Really, time is flying this year. But let's just speak about what you've written, which is essentially the interim president, Ahmed Al-Sharaa, has been under a lot of pressure to create a unified country, but it's been very difficult. And the manifestation has been a whole wave of sectarian violence that has flared up, not just in Suwaida, but in other parts of the country as well.
Absolutely. It's good to be with you. I think the crux of the matter is Ahmed Al-Sharaa is looking to assert his control over the entirety of Syria, because he did inherit a fragmented country. I mean, as you know, the Kurds pretty much have semi-autonomy in the northeast. The Druze, who were obviously involved in the latest unfortunate incidents, were also enjoying some measure of semi-autonomy in the south. And he came in and he basically wanted to stitch this country back together, assert his control, and he folded all of the rebels, including some of these sectarian jihadists, into the new security forces. And I think herein lies the problem, is that every time there is unrest around the country, whether it's in Suwaida, as we saw earlier this month, or on the coast in March when his forces were attacked by Assad loyalists, I mean, he dispatches these forces, and unfortunately they continue to act like the sectarian jihadists that they were when they were fighting Assad. They basically side with, they side with, they basically, the problem is there is retribution against civilians in these areas.
They commit atrocities.
Exactly. And that's the problem. And they're basically operating like the non-state actors that they were when Assad was still in power. Yeah. And I think herein lies the problem. And unless he really can take control of this situation, it will threaten the whole transition.
But it's interesting because there seems to be a disparity between what is actually happening on the ground versus how the international community and even Arab states are approaching Syria. You had President Trump meeting face-to-face with the interim president. You had the U.S. announcing that they're lifting Syrian sanctions. You had Saudi Arabia send a 150-person delegation to Syria this week to commit to MOUs of $6 billion. Why is the international community so interested in Syria given it's still not stable?
Absolutely. The whole point is they want to support him in order to stabilize the country. much is at stake. It's one of the most strategic countries in our region here. It sits there right on the eastern shores of the Mediterranean, straddling the Arabian Peninsula. As you know, previously it was under the influence of Iran. Once Assad left power, and obviously it was in the orbit of Russia. Vladimir Putin himself intervened in Syria, to back Assad, to support him in his war against his opponents. So a lot is at stake. For the U.S., it wants to stabilize Syria. Remember, this is the place where ISIS at one point was controlling, territory. Exactly. Yeah. It borders Iraq. It wants to make sure that the U.S. wants to make sure ISIS doesn't come back. And obviously it has a lot of interest in stabilizing Syria and the Gulf states. You mentioned Saudi Arabia has an interest in bringing Syria back to the Arab fold and making sure it doesn't fall back into Iran's orbit. So they're doing everything to support Al-Sharaa. Obviously, Qatar is another country that's a major supporter. Turkey is a major supporter. Even the United Arab Emirates, where we sit, initially was apprehensive, is now backing him.
Yeah, and there's this very shaky ceasefire holding up now also between Israel and Syria. Israel have several times stepped in to support the Druze community in Syria too. So that adds a whole other dimension. But at the same time, we hear reports of the U.S. potentially trying to push forward with negotiations on normalization between Israel and Syria. It just seems difficult to believe while these attacks are ongoing and given the fundamental distrust that Israeli leadership have of Ahmed Al-Sharaa.
Yes, this goes back to really the goals of the U.S., particularly the goals of the Trump administration here. When President Trump came back to power, the first thing he said, my priority is to expand the Abraham Accords. And obviously, we've been talking about Saudi Arabia. But in previous stories that I've written, the Saudis have even put on the table, look, if we're able to get a state for the Palestinians, if we're able to end the wars, if we're able to do all of the things, the preconditions for normalization, it's not only Saudi Arabia that's going to come to the table and normalize its ties, but all these other Arab states, including countries like Syria and Lebanon. So it has been discussed. When it comes to Israel, again, Israel sees its national security interests at the moment best served by allying itself with minorities like the Druze. And it's deeply mistrustful of the Sharaa government. And obviously, this is within the context of post-October 7th and this new Israeli policy of basically getting ahead of the threat, right? We see that in Lebanon, where it still maintains troops. And now in Syria, it does control bits of Syria. It has made an incursion into Syria. So it is a very complex situation. Today, the U.S. Special Envoy to Syria, who is the ambassador to Turkey, Tom Barak, is meeting with his Syrian counterpart in Paris. And obviously, this is going to be top of the agenda, including, obviously, the events in Sueda.
Yeah. Sam, thank you so much for breaking down the complexities of the situation for us. And I would encourage everyone to take a look at Sam's piece up on the terminal today. Sam Dakhir. And coming up, billionaires are pouring capital into Africa's luxury tourism space. We get you the details next. This is Bloomberg. Africa's luxury tourism boom is drawing capital from billionaires, tech tycoons, and Middle Eastern investors. They're filling a funding gap left by banks, which are cautious due to political risk and limited performance data. For more on the shift in African hospitality, we're joined by Bloomberg's Pranesha Naidu in Johannesburg. Pranesha, okay, well, talk us through what is driving Africa's luxury hotel boom and why there is so much interest all of a sudden to get involved when the banks are stepping out.
Thank you so much. So Africa is on the cusp of a boom in luxury tourism, and that's partly driven by a change in sentiment after the pandemic. Now people are traveling for wellness. They also want once-in-a-lifetime and bucket list experiences, and Africa has that in loads and bounds, especially when it comes to encounters with wildlife and conservation. So that's drawing a lot of interest, and at the same time, many of the world's top hoteliers and investors see Africa as one of the last underpenetrated markets for travel and tourism. So that's also stimulating great hotel development across the continent.
How significant could this be for Africa?
Well, I think it has a lot of potential for Africa and potential that Africa now needs to exploit. It provides the continent with an opportunity to showcase a different side. One, as I said, with great natural landscapes, conservation, dynamic cultures, and wildlife. At the same time, it also gives governments an opportunity to boost job creation, especially in some of our reporting shows that in these ultra-luxury hotels, people usually employ at least 4 members of staff for every single guest. So it's got massive potential to create jobs across the continent and to boost development, especially in emerging cities where you have hoteliers that come in and build entire ecosystems to welcome people.
Yeah. Well, that is the goal, I'm sure. Pranesha Naidu from Bloomberg News, thank you for bringing us that story. Well, for more stories like this from the continent, be sure to subscribe to the Next Africa newsletter on the terminal and our website. And if you prefer audio, you can sign up to our weekly podcast, available on Apple, Spotify, and wherever you get your podcasts. And for a deeper dive, catch our TV show, Next Africa, airing tonight. You can also watch our previous episodes in full on your terminal, our website, and on YouTube. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Turkey has cut interest rates for the first time since March, with a bigger reduction than expected. Policymakers cut rates to 43% from 46% and said that future moves will be assessed on a meeting-by-meeting basis, focusing on inflation. The Turkish central bank's easing cycle was halted in March when the arrest of a leading opposition figure triggered a market sell-off. Deutsche Bank shares rose to the highest in a decade after reporting better than expected trading results. The CEO of Germany's largest bank says the results put the lender on track to meet its targets for the year. Bloomberg's Valerie Teitel joins me now. We just have a screen up of Deutsche Bank's end-of-day trading session, up 9%. Wow. European banks, and I guess Deutsche Bank being the sort of flagship one yesterday, seem to be keeping pace with their Wall Street peers.
Yeah, exactly. That was the theme of yesterday. Both Deutsche Bank and BNP posted some very strong fixed income trading revenue numbers. For Deutsche Bank, their fixed income revenue was up 11% from the quarter last year. BNP even stronger, 27% rise in fixed income trading revenue from the previous quarter. It surely beats the Wall Street average from their earnings season, which was around a 14% rise in fixed income trading revenue. But for Deutsche Bank, there also were some hints about a share buyback that helped also lift the shares in trade yesterday. They had mentioned that they had filed for a share buyback and are awaiting permission from the ECB to do so. But it does seem like for the CEO, Christian Savings, that his turnaround plan for Deutsche Bank is more than working.
I was going to say, what a turnaround for Deutsche Bank over the last few years. Really quite stellar. Let's talk about something else that has been sort of one of the other big themes of the market this year as we speak about all-time highs and lack of breadth in the market, but also meme stock mania has returned once again. Some crazy moves in things like Krispy Kreme, Kohl's. What's going on there, Val?
Yeah, donuts, action cameras, and struggling department stores have seemed to attracted a huge amount of volumes from retail traders this week. All these stocks, what they have in common, Jumana, is a low dollar share price and a high short interest, and that's attracted a lot of internet attention on these names. It's also been helped by the fact, Jumana, that retail traders are known. They have bought the dip back in April when the equity market was down 20%. They seem to be comfortable taking these kind of punts, especially with the equity market now at all-time highs and the VIX trading at 5-month lows. It might have given them some confidence to do these trades. We've also seen surges in call options, Jumana. You know, that's a favored way for these retail traders to play these kind of trades. But this week has definitely seen a return to 2021's meme stock mania.
Yeah, roaring kitty, YOLO. It's all coming back. Val, thank you so much for the overview. What's on the price action this week? Equity futures are leaning towards the green despite a, moderately lower session for Asian markets. And here you have it. S&P futures up about 16 basis points. European markets actually tilting towards the red now, down 10 basis points. So we're going to pick up the conversation in the next show. But that is it for this one. Horizons, Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with me for Daybreak Europe. This is Bloomberg.